Okay, so let's dive into one of the most polarizing, most fascinating companies out there today, Palantir. You've probably heard the arguments. On one side, it's the future operating system for the entire Western world. On the other, it's a fantastically expensive stock just waiting for a reality check. We're going to break down both sides of this argument.
See, at the very heart of this whole debate is a major contradiction. The company's actual performance and its stock price are telling two completely different stories. And that's what we're calling the Palantir paradox. So let's just look at the raw numbers.
So, on one hand, you have absolutely jaw-dropping growth. I mean, we're talking about a 70% revenue surge in just the last quarter of 2025. For a company this big, that's not just fast, it's an acceleration that's pretty much unheard of.
But then you flip the coin and you see the valuation. The stock has been trading at a staggering 200 times its trailing earnings. Now, to put that in perspective for you, a normal, healthy software company might trade at, say, 25 to 40 times its forward earnings. So Palantir is playing in a whole different universe when it comes to price.
And this isn't just growth for the sake of it, right? The company is ridiculously efficient. It scores a 127 on something called the Rule of 40. That's a key metric where you just add up the revenue growth rate and the profit margin. A score of 40 is considered excellent. Palantir is more than triple that. It's kind of nuts.
So what happens when the numbers are this contradictory? Well, Wall Street basically has a meltdown. Analyst price targets are all over the place, from a super pessimistic $50 a share all the way up to a hyper bullish $382. A spread that wide tells you everything you need to know. Nobody can agree on what this thing is actually worth. Okay, so let's unpack the bull case. Let's look at the engine that's powering this incredible performance. What exactly do the believers see that makes them willing to pay that sky-high price? At the absolute core of Palantir's advantage is this idea they call the ontology. So imagine all of a company's data, spreadsheets, emails, sensor data, you name it. Imagine it all as Lego bricks scattered in different rooms. The ontology doesn't just collect the bricks, it builds a single, living model of the entire castle. It connects every single piece. And once your whole business is running on that model, trying to switch to something else is like trying to rebuild that same castle with a totally different set of bricks. It's almost impossible. And they use this tech with a really brilliant go-to-market strategy they call AIB boot camps. So instead of the old-school months-long sales pitch, Palantir gets customers into these intense workshops. For a few days, they build real applications using their own live data. It cuts the sales cycle from months down to days, and it gets clients totally hooked on the platform's power, like right away.
And this isn't just theory, you know. This has a real-world, life-saving impact. Just look at this example. A huge hospital network started using Palantir and cut the time it takes to figure out bed capacity by 75%. But even better, they shaved a full hour off the emergency hold time for every single patient. That is a direct, tangible improvement in people's care, all powered by software.
Now, this is where it gets really interesting, because you can see how all that operational magic turns into just explosive financial growth. Yeah, the 70% overall growth is amazing, but look at the US commercial business. It surged 137%. This is the proof that the company is breaking out of its government-only shell and into the private sector, and they're doing it with these incredible 57% operating margins. And the best part? This crazy growth isn't being funded by risky moves. It's all built on a foundation of solid rock. Palantir has what you'd call a fortress balance sheet. We're talking over $7 billion in cash, zero debt, and 8 straight quarters of actual GAAP profitability.
But, you know, maybe the ultimate bull case comes from its deep, deep roots with the military. This software isn't just for spreadsheets. It has been used in active war zones for real-time operations. And this quote from investing.com just nails it. If the tech is good enough for modern warfare, it's probably good enough to manage your hospital supply chain.
Okay. Let's take a deep breath and move to the other side of the paradox. Let's talk about the bear case, which really all boils down to that one central risk for any investor, the price tag. Because even if you believe every single good thing about the company, the question is still, what's a fair price to pay for it? I mean, just look at this chart. When you put Palantir's valuation up against other amazing high-growth software companies like CrowdStrike and Cloudflare, it's not even in the same ballpark. It's not just a little bit higher, it's demanding a price-to-sales multiple that's nearly 3 times higher than its peers. It's in a totally different stratosphere. So here's the crucial point for the bears. It's simple. The stock is priced for perfection. Period. There is zero room for error. Any tiny slowdown in growth, any little slip in margins, any new competitor, and that massive valuation could come crashing down. And that risk really breaks down into four main concerns. That astronomical valuation is by far the biggest one. But the bears will also point to its heavy reliance on government contracts, the risk that eventually competitors will build something similar, and of course all the geopolitical risks that come with being so tied in with military and intelligence work. So how do we reconcile these two incredibly powerful but completely contradictory stories? How can a company be a world-class operator and, at the exact same time, a terrifyingly expensive investment?
Well, it really comes down to a fundamental disagreement. The bulls, they see this indispensable, one-of-a-kind operating system with a moat that no one can cross. The bears see a great company, for sure, but one whose stock price already reflects a decade of perfect execution, which makes it super vulnerable.
You know, the company's CEO, Alex Karp, he hits this issue head-on. He argues that you can't compare Palantir to other software companies because, well, it isn't one. In his mind, they've created an entirely new category, an N of 1, where all the old rules about valuation just don't apply.
And that, right there, leaves us with the final critical question. Is Palantir truly this unique thing that's going to redefine value for a generation? Or is it an amazing innovator whose own success is going to attract a ton of competition that eventually brings it back down to earth? Answering that question, that's the key to solving the Palantir paradox.